This week we are coming out with two interesting webinars. The first webinar is Saturated Markets, Smarter Allocation, the Multi-Asset Advantage, where we discuss our multi-asset PMS product Sphere. And the second webinar is Simple Behavioral Rules for Smarter Investing, where we discuss about behavioral finance. To join the webinar, click the link below.
Something noteworthy has unfolded in Indian banking. PSU bank stocks outperform private peers despite volatility in the broader market. The Nifty PSU Bank Index held near 9,665, up 10% on a monthly basis even after a mild dip. For years, private banks dominated as India's efficient growth engine. So, the key question now is this just a temporary rotation or are we witnessing a structural leadership shift within Indian banking? Today, we will break down this divergence, why PSU banks are outperforming, what's holding private banks back, and what this means for investors. PSU banking stocks displayed clear relative strength. The Nifty PSU Bank Index gained in the prior period and remained resilient compared to the relatively subdued performance of the Nifty Bank. Among the leaders, Union Bank was up 1.5% and Bank of Baroda was up 1.51%. In contrast, major private banks such as HDFC Bank and ICICI Bank remained flat to slightly negative. Balance sheet repair, a proven turnaround. Between 2015 and 2018, PSU banks faced a severe NPA crisis. Gross NPA were close to 14%. Today, GNPA stands at 2.3%, a multi-year low. Net NPA is around 0.6 to 1%, and the provision coverage ratio is 94.6%. This is dramatically cleaner balance sheet. In quarter 3, financial year 2026, SBI reported 21,028 crore profit, up 24% year on year. The PSU banking sector is projected to cross 2 lakh crore profit in financial year 2026. Capital strength is solid, with CRAR at 15.96%, well above the regulatory requirement. The insight is simple. When risk declines, value re-rate. Price to book multiples have expanded from 0.4x, reflecting improved confidence. Credit deposit ratio edge. The system-wide credit deposit ratio is at a record 82.2% as of January 2026. Credit growth at 12 to 14% is outpacing deposit growth of around 10%. Now here is the differentiator. PSU banks operate at 74 to 75% CD ratio, while private banks operate at 90 to 92%. That gap is meaningful. Private banks face funding pressure, PSU banks have lending headroom. As a result, PSU banks are growing credit at around 14%. In a liquidity constrained environment, flexibility becomes a competitive advantage, and right now, flexibility favors PSUs. The financial year 2027 budget allocation of 12.2 lakh crore toward capital expenditure strengthens the domestic credit cycle. Infrastructure, MSMEs, and public linked products are areas where PSU banks have historically held strength. Retail and MSME credit demand is growing 15 to 20% year on year. That demand is flowing meaningfully into PSU balance sheets. This aligns PSU banks directly with India's capex cycle. Why are private banks lagging? Private banks remain structurally strong institutions with superior digitization, operational efficiency, and governance standards. However, in the short term, elevated CD ratios increase deposit cost, net interest margins face pressure, and capex linked credit acceleration is slower compared to PSU exposure. Markets price marginal changes. Banking carries roughly 21% weight in the Nifty. When PSU bank participate in leadership, market breadth improves significantly. This signals confidence in domestic growth, strength in capex cycle, and rotation into cyclical and value-oriented sectors. It also supports downside stability in volatile environment. Let's approach this with structured allocation thinking. In short term, momentum currently favors PSU banks. Use correction strategically and avoid chasing extended rallies at euphoric levels. In the medium term, PSU bankings are well positioned for capex driven credit expansion and continued re-rating. An allocation of portfolio exposure towards the PSU banking theme can be considered depending on the risk profile. Quarter 4 will be crucial for confirmation. In the long term, diversification remains key. PSU banks have undergone a genuine transformation. Private banks remain elite institutions. But in this phase of the cycle, liquidity position, valuation comfort, and capex alignment are favoring PSU banks. Markets operate in phases. The key is not choosing permanent winners, but recognizing the current leadership. Markets rotate, leadership changes, strategy must evolve. If you want a portfolio built around data, discipline, and long term clarity, connect with Milestones to Wealth.